Hello and welcome to Business Today. I'm Siddharth Zarabi, and with me today, Professor Srikant Datar, the Dean of the Harvard Business School, and with him, Nikhil, the Director and Head of Top Tier Business at HSBC India. Absolute honor to have you here with us on Business Today, Professor, and Nikhil, you as well. Over the next 10-15 minutes, what I want to do is to get Professor Datar to tell you, our viewer, about the new age Indian business, particularly Fintech and new age banking. Professor, where I'm coming from is a country that till a decade back, or maybe even 5 years back, we used to keep talking about and writing stories about the masses who were unbanked. Hundreds of millions of people. And then 2016 happened, demonetisation, the world changed. The question that I have for you, and from your perch, observing business, meeting people all over the world, is the Indian fintech revolution unique? Do you think it is extraordinary? Because a lot of it is made out in India. And there are certain elements like eKYC, Aadhaar-based identification, and phone banking, and the whole world seems to be changing, especially for our rural masses when it comes to banking. How significant is this change, Professor?
I think it is extremely significant because, as you said, if you are now opening up banking in ways that are first to the unbanked, that's sort of one. Second, in more convenient forms, so they can actually engage in that activity that would have been otherwise very difficult for them to engage in. And third, in a way that I think for them, because the biggest issue there is, do you trust exactly the system that is being used to execute transactions that you want to execute? And if you can combine doing something that they couldn't do before in a convenient way, in a way in which they can trust it, it's, I think, a very important change and an important direction in the financial services business.
And the point about trust that Professor Datar talks about is very, very significant, because anything to do with digital, electronic, especially in people living outside of urban India, bankers and dyed-in-the-wool bankers like Nikhil would know. Nikhil, tell me, is banking changing? Because you obviously represent a storied brand, decades of business all over the world, particularly in India as well. Is banking changing in India? Is this fintech revolution, business 2.0, something significant, or is this just the froth on top of the startup scrum?
No, thank you, Professor Datar. Siddharth, if I have to draw a significant corollary, I think if there are 2-3 big disruptors which are currently at play for banking 2.0. I think it started from, like you said, the demon, etc. But the larger part of it would be the jam trinity when you started the whole financial inclusion. You go back to the 70s, we've been talking about financial inclusion, it never started, and then finally it needed certain degree of will to implement it on the ground. It actually caused disruption because you added close to about 30 odd crores of new bank accounts. But did the banks have the paraphernalia to really service them? I think we could open the accounts. We probably would have taken time to service them. I guess, and if I take a cue from Professor Datar's statement, that's where the genesis of fintechs actually originated.
So hold that thought here for the audience. If I can do it on your behalf, the jam that he's referring to is not made of strawberry. He's talking about Jandan, he's talking about Aadhaar, and he's talking about mobility. Again, numbers of mobility in India. Many people have 2 SIMs, again, features that are not seen over the rest of the world. Please continue the point about jam.
No, thank you for the clarification. No, I fully agree. I should have clarified. But the other thing is, once you had this financial inclusion, it actually forced the banks to go back to the drawing board to say that, do we have a gap here? Because there's another disruption which happened parallelly. And again, I'll obviously refer to Professor Datar's speech earlier in the day to say that technology as a disruptor was already at play since maybe the 2015 onwards. We could see it coming, but I think the pace at which it picked up creative disruption or destruction. possibly gathered pace
Has
post
it
the
also
demonetization.
has it also happened in the public sector, which till some years back, core banking used to be a favorite buzzword, board meetings used to be held around it, and implementation would take years?
I think that's where a lot of these things came extraordinary. I'd call them as extraneous factors. So demonetization was the first big push. A lot of the new players in the fintech space actually got originated because of that. Now the classic case links to the same financial inclusion bit, because you had the 30 crores account, but the banks did not have the paraphernalia to service them. So who came in? It was a fintechs led by the technological interface, which could actually fill in that gap. I would possibly want to take the liberty to say that the banks did not have the physical infrastructure to service those clients.
Professor Datar, this point about how there was a need gap kind of situation that was created, and you had young Indian minds who typically in years gone by would perhaps want to travel overseas. They decided to set up business in India. Yes. Dozens of them. And, I don't think anyone can perhaps even recount all the names who are operating. Is this unique, what is happening in India? Do you see it happening elsewhere in the world? Because sometimes, we kind of try to blow out of proportion certain advancement and we say, sab changa hai. Yeah. So what's really happening here?
No, but I think it's not unique as in there are obviously lots of fintechs happening in other parts of the world as well. And of course, if you go back even earlier and you think about the way telephones used to be used for banking in places like Kenya and the early movement where this all started, Africa has clearly been a place where what is very interesting is the kinds, and of course payments is a very big area in the US as well. But the kinds of applications for the kinds of people at the scale that we are talking about here is what is unusual, because there aren't that many challenges of the unbanked, in the US, for instance. So the fintechs there are again many different types, but companies like Lending Club are doing other kinds of applications. But as Nikhil said, the key is how do I break, and we call it breaking fixedness in the way in which we think about things. How do I break my fixed way of thinking that I'm not going to necessarily use some physical infrastructure? That's not what is going to be needed. But I can use a technology that will be trusted, because that's a big part of it. Even when these fintechs came in the US, technology that can be trusted to meet important needs. So the way I think fintechs developed here for the needs that were very unique here were actually, but I would say certainly some parts of Africa that happened as well.
Professor, since you spoke about Africa, I don't know how many of our viewers would know that experiment and that business was actually started on the back of an Indian mobile network, investment by an Indian company, Airtel, and M-Pesa was something that then came to India as well. Professor, the point really here is we saw India move from 40 million landline connections to 400, 800 million mobile connections. Yeah. So, the whole thing skipped what happened in the US, for example. Yeah. Is that your sense what is happening to conventional retail consumer banking in India as well?
So I think, and Nikhil will obviously have a deeper insight into this. There is enough room for people to meet different needs in different ways. I think for the particular need that emerged that the fintechs solved, they're able to move faster, they are nimbler, they are technology focused, they are born digital, and so they think in that way. They're able to satisfy that need.
The promoters, the founders, the startup guys, the CEOs have probably never filled forms. Some of them have probably not even written checks.
But yet they were able to tap into this particular need in a very powerful way. Whereas there will always be room for other type conventional banking that exists because it satisfies a different need. I think it's how each adapted to address their particular needs and the particular customers and consumers that they were after.
A final point, Nikhil, and I know you kind of deal with a different set of people rather than conventional retail consumer bankers, but the change that technology is driving through banking, especially in India, is it more to do with consumer retail banking? Or have the higher, the private banking business, has that also changed? What I want to ask you is that because of remote working, people moving away, do you see technology playing a big role in big banking deals as well?
No, very good question, Siddharth. So I'll actually take a step back to tell you that today most of the bank boards have actually gone to the drawing boards to say, let's revisit the segmentation. The reason being, you've added new households, which were not your target audience earlier. So you've gone back to the drawing board to say, what is going to be my digital/physical optimality in terms of how do I serve them? So the guiding principle for me then becomes cost to serve each segment. So to your question now, so I will what I've done essentially as a bank is to say that for a certain segment, which was a relatively lower threshold, I'd have a digital interface largely, but I'd still want to serve them, which were earlier outside of my purview as a bank. But as I go higher up, I'd probably need to have a more physical overlay as well. To your other point in terms of how the uber rich are sort of dealing with it, I think they would have preferred a lot of personalized touch, but given the force of circumstances, if I may use the word, 2020 has actually been a great leveler. So digital capability today is a must have. You do not have an option to survive. Even for the uber rich, they want to have a personal interface, but transactions need to be supported in a more flexible manner. So you will have to have offline, online combinations.
A mix and so much there that Nikhil has said, which I would like to take forward, but perhaps that for another conversation. As I wind up this conversation, Professor, one point that I really wanted, and I was thinking of a question. We've seen several decades and perhaps Indian private business over the last 60, 70 years has gone through a pre-reform, a post-reform, and then what I believe is a post-startup world. From your point of view, is Indian business becoming better? Are they becoming more responsible? Are they becoming more ethical? And I don't mean to say that they were unethical, but is the world of Indian business changing because of all the young blood, talent, startup money, governance, and an open, transparent work culture, which is less promoter driven? Is that really happening? Do you believe so?
Yeah. And again, I think this is happening all over the world. So this is not a phenomena that I would say is only restricted to India. But this new breed of entrepreneurs that you're talking about, and as I was describing earlier, the kind of purpose and passion that they bring, the ability to move quickly, the ability to almost dare to do things that you wouldn't imagine that they would even think about doing. I think it is a world where they are less bound by however business used to be done, by definition. And when you're less bound by how business used to be done, you always dare to do things in very different ways. So I think it is, yes, they are different, and yes, it's happening in the way in which you're describing, but it comes from the same mindset that they just think differently. They don't think about, a physical thing. They think that technology can make it work. And I think that the need for them, particularly if they're more on the tech side of things, to build this kind of trust that they must build. That's the biggest issue in any of these, technology driven businesses now. Impels them to think about things in a different way. I think in a wonderfully different way.
I'm running out of time, but a quick follow-up. Decades ago, big businessmen would set up places of worship.
Yeah.
They would perhaps invest in hospitals and schools. What should a businessman who is now a startup, a unicorn, what would you advise him to do when it comes to corporate social responsibility?
So I think the whole world of corporate social responsibility will need to be thought of in a different way, Siddharth, than the way it was done. So the way it was done is, I'm going to make money this way and then I'm going to spend it in a different way. Today, when I see these startups and these individuals working, what they think of their social responsibility is much more integrated into how they think about the business itself. The desire to help an unbanked is as important to them as what they might do in, the way in which they might spend money after it's made. That I think is a very positive change. And this is what I was talking about earlier when I talked about purpose. The fact that you can not think about corporate social responsibility as post profit, but as part of how you make a profit is, I think, how these people think now. Very different than what it used to be.
Absolutely. And that's a fascinating new world that's happening as far as Indian business is concerned, Business 2.0. And I hope the next time round, Business 3.0, I get an opportunity with Professor Datar and Nikhil to have this short conversation. I've enjoyed it very much. If you have, thank you very much. Thank you for your time, sir.
Pleasure.
If you like the video, do like, comment, share and subscribe.